Welcome back to the Eric Krown crypto channel. Wishing you a happy early start to this nice Sunday macro day. Stop laughing in the background. There's nothing funny about this analysis. Oh baby, we're about to go deep, very, very deep. And I couldn't be more excited for today's content. No, just kidding. Although it is a rather exciting day. Anyways, today is, of course, going to be focused on the very, very long term. I want to go over a chart that's been kind of making the rounds around crypto Twitter with regards to the halving and come at it from a more statistical-based narrative, because I do think that there's a lot of very interesting things to be looking at that are relevant, for the next few months, going into the next year, actually, as the halving is almost 1 year away. Of course, we'll be coming at another higher term time frame idea as well. But before we get into that, I do want to let you know that we only have another day and a half of our current 5-year anniversary sale going on. That means after that, no more sales ever again. This is literally the last time. No, just kidding. But it is actually the last time, or one of the last times, I should say, to get the Jewel Light in the premium format, because we are going to be sundowning that particular program. Again, if you are in premium, nothing will change for you as long as you are actually subscribed. So nothing's going to be taken away from you, but we are going to be taking away that overall service, and we're going to be making the Jewel Light its own service, and it will actually be a little bit more as well, a little bit more. But you can still get it for 1 month for free if you follow the directions in the link in the description below, as you can see on the right-hand pane over here on the Krown trading application. All right, sweet. Now that we've gone through that, I come at you with some higher term time frame ideas. I come at you bearing some gifts. First and foremost, we'll start off with this one. I'm going to follow up on this idea. This is the 5-day volatility versus stochastic momentum chart. And what essentially are we looking at? Well, what we're looking at right here is extreme lows on volatility on the 5-day time frame, represented by the BBWP indicator. I defined extreme lows as anything below 15 percentile or more. That is extreme compression from a higher term time frame like this. Now, what happens after compression is mathematically programmed to have an explosive expansive phase. We've seen this many times, even in the past year. You saw the most recent one, actually, the most recent setup was getting that move and giving us a major buys from $17,000 all the way up to $25,000. Kind of crazy right there, or at least sounded crazy when we first started talking about it. But statistics at the end of the day, they do their thing. Statistics are just what they are. Saw all the other signals were to the downside this past year, however. Anyways, once we start to see volatility expansion, which we're actually starting to see potentially on this next period, which I do think personally is a little bit premature. So this might be flashing the setup a little bit too prematurely here. We could very easily see this one by this current closure, remain within the critical zone and spend some time in here and then explode, as it naturally will. But for right now, it is back above 15 percentile. Now, of course, there are another 2 days left until closure. So this is, it's still kind of in limbo, I would say. But once we do start to see official volatility expansion, the setup that we've observed is that volatility expansion plus the direction of the stochastic oscillators has provided the impetus for a very sizable move in the direction of the stochastic oscillator. Right now, the direction of the stochastic oscillator is pointed to the upside, and it will be remaining with upside posturing as long as Bitcoin is above 26,100 on the next 5-day closing period. That is to say that as long as Bitcoin is above that pivot, the probabilities are on, another expansive move to the upside. What sort of probabilities, you might be asking? Well, we can go and reference this spreadsheet over here. So in this case, I'm only looking at the long setups. We'll also look at the short setups as well. But for right now, if we go and back test the full history of Bitcoin, like literally the whole damn thing, the whole hot dog, no, that's not it. That's not it. Doesn't sound right, man. But the whole damn thing. Yes, we found that there's been 11 prior setups that were to the upside. So 5 days stochastic was pointed to the upside upon volatility expansion. And of all 11 setups, they actually played out with big upside moves. So I don't expect this to always have a 100% hit rate, but for right now, it does. And, fair enough. Anyways, over the course of the next 33 days on average, we did see an average return, again, in this case to the upside, of 43% with a standard deviation of 10%. So giving us a range between about 33 to all the way up to 53. If we go over here and play around with these numbers just really, really quickly, and let's just say, wrong one. Let's just say that this current one does actually is actually going to be the expansion phase, meaning that the next 5-day closure, like preferably closes like, significantly above 15 percentile and like above the moving average, and it starts to get a positive slope. Something like this over here would look good. Then I guess at that point, on the lower end, it would be relevant to potentially be looking at a 30% move, which would put Bitcoin in the low $30,000 territory, which again sounds kind of crazy from right here. The average move again was like 43%, which would be $35,000, and 50% would obviously put Bitcoin, just under $40,000. So I do think that this is still like very premature to be talking about these sort of things, but it is within the cards now, as this setup over here does start to become more and more interesting. So it's not quite there just yet, but it is on the radar at this point. Just like back down in the lows when Bitcoin was doing this whole action over here in December, especially, we said, hey, put this setup on your radar. 5-day stochastic started to point to the upside. It's like, all right, this one's more likely to move to the upside, and well, that's what we got, and many other times to the downside over the past year as well. Anyways, keep these numbers in mind, because what I'm going to take you over here to is a completely new chart that I've never spoken about on this channel. Now, I have been seeing something similar, although in maybe a more rudimentary form, not meant as an insult, but just just not the same thing as to what I'm going to be doing on this particular video. On Twitter, a few times, people have been posting what typically happens for Bitcoin one year, or about 1 year, as we'll see, away from the halving. So as you probably know, if you're watching content like this, the halving is when Bitcoin halves and goes down 50%. No, kind of, actually. But it's seen as a reduction in the output of supply, in the output of the rate of supply. Anyways, so here all of the green vertical lines represent past halving dates, and this one over here represents the presumed one in the future. So it's kind of like a predicted date, but somewhere around there, is kind of the general idea. So what I've done here is I've done several things. I have I've measured the time from the breakout, if you will, from this overall downtrend, the old magical line, which again, I'm not a humongous fan of, but it's just kind of the best way to represent this idea in this particular fashion. And I've taken that time till the next halving. So in this case was 52 bars. So this is a weekly, so that's basically a year. We saw the breakout happen about 1 year in advance of the halving. Now we're gonna go much deeper than this soon enough. So don't fucking hold your damn horses. Same thing over here. Bitcoin breaks out of the overall downtrend 54 weeks. Okay, so this one was 52. This one's 54. 54 weeks before the halving date. And then more recently in 2018, 2019, we saw the breakout 58 weeks before the halving date, the official halving date. So we have 52, 54, 58. There does seem to be a bit of a preliminary relationship going on right here, in the form of, this times 2, so 2 times 2, or sorry, 2 years, and then 4 years. So times 2 again, theoretically would be 8, which would put us where? Which would put us at about 64. And well, where are we at right now? We're at week 64 happened, right around here. So we could say, again, just kind of like fitting the data to it, right around here. And that was retested perfectly, and then boom, onwards and upwards thus far. So that relationship does seem to be holding to fruition thus far, which I thought was interesting. 2, 4, and then 8. Sorry, it should be 8. I did have that right to begin with. All right. So 8 would be 64 or 66. Apologies, right there. Yeah, right. I did have that properly before. Anyways, bad mental math, but you get the idea. Anyways, okay. So now let's take this a few steps further, because this is all mumbo jumbo for now. What we've seen in the past after that breakout was an initial, pretty explosive run, followed by a pretty, nasty pullback or crash, if you will. I think the most obvious one was over here in 2019, 2020 off of the Rona dump. But what we can do now is we can start to measure first the the actual the move to the upside first. So in this case, I'll give you an example. Let's actually do the most easy one. Okay, so over here we see breakout to next high. Okay, that was a 240% move for going from, I like to do things on closures in this case, from closure to next wick high. So that's about a 162% move over the course of 84 days, right? Somewhere around there. I'm not doing it exactly perfectly right here. The perfect one is over here. So you can see, 167% move. This was the last one, obviously. And it took how many days? It took 126 days in this particular case. Now, if we do the same thing for all of them, well, we can find a nice relationship. The first cycle to the next high did produce a gain of about 155% over the course of 42 days. Which is interesting because then from the next high to the low was another 42 days, which, yes, we also have data on as well. Anyways, for the next cycle, we saw the breakout at about 250, going all the way to 500, so about a little over 100% gainer right there over the course of 133 days. Then the most recent one, as we just went over, about 167% gainer, so very comparable to the first cycle right here. And then the time taken was about 126 days, so more comparable to the second cycle that we saw. Okay, so that produced these relationships over here and produced these averages. So on the first, on the first major one, about 140, or sorry, not the first major one, but the average was about 140%. Again, there's some variance here. We really don't even have that many iterations, obviously, but I just thought that this data was interesting. And the average the average time taken was about 100 days. So, if we're looking at this right now, going back into the data and using our current one as a trajectory, well, from the official breakout to where we're at right now has been about 28 days, working on 35 days. I'm using a weekly right here, obviously. 100 days, which again is the average, would put us into early summer of this year, late May, early June. So that's kind of about when we might be expecting this next major high. And as far as the average percent return, well, whoops, I'm on the wrong one. That was 140%. Again, I'm just playing around with numbers here. I'm not saying we're going to have a 140% move, but where would that, to put things in perspective, where would that put Bitcoin? That would put Bitcoin like at $50,000. Kind of fucking crazy. Again, we do expect variance within this data. It could be maybe more relatably at around, 40,000. Even that still sounds like quite a fair bit from where we're currently at, but you get the idea. Then what I've done is I've taken the measurement from that high to the next low and recorded the amount of days and the percentage pullback, crash, whatever the fuck you want to call it. So going back into it here, first cycle, we saw a crash of about 37.5% to the next low, which took 42 days. Next cycle, 39.33% crash, taking the course of about 14 days. It's very, very sharp. The next one after that, the most recent one, was about a 52% one, or 53% one, coming off of the Rona dump over the course of 217 days, again, from high to low. So, that would obviously take us out, that would give us an average of about 91 days with an average crash of about 40, a little bit above 40%. So, while these statistics would show that, upside is more likely in the near term, maybe until like summer of this year. After that, let's say that things like, I don't know, they get somewhere around here. Again, I'm just pulling numbers out of my ass, or it's not that I'm pulling numbers out of my ass, but just kind of like going for a best fits based off the data. What would, 40% off a current price action look like? That would basically bring Bitcoin back down to where it is right now, depending upon how high it gets. Now, if the 5-day setup over here plays out in the way that we're looking at over the next, and we didn't even go over days. Oh yeah, we did go over days, about a month, which by the way, would put us into fucking May, just so you know, which is kind of interesting. Well, let's say that, it goes for the upper end of that, which I think was like a 50% move from setup given. So some like this, $40,000. Well, what would a 40% pullback look like from there? That would put Bitcoin back down around about $24,000 to $25,000. So, could we see it some like this? Yeah, possible. I guess it wouldn't be as aggressive as this. Maybe more like this, boom, and then maybe try for the actual move. Could be something like that. But, you know, I just thought that this data was interesting. Again, we're not going off of that many iterations, which does, you know, call into question the efficacy of it, obviously. But it's the best thing that we can do on a Sunday when we're kind of exploring new ideas. Other than that, the other thing that I want to be aware of on a Sunday is, of course, the weekly closure, which the weekly on spot price action is going to have a chance to close above maybe the mean band here on the Gaussian channel. That would be my sort of next, my next sort of indication that Bitcoin's ready to take a major leg up, probably somewhere around the top side of the Gaussian channel, which, by the way, is currently at about $34,000. Now, personally speaking, I do think that this first test is probably going to be rejected in the very, very short term. Probably going to see a bit of a consolidation around this region, and then if it's going to bust on through, that's when I'd expect the busting action. Or if it's going to bust on through, I'd expect the busting action. That's right. Just release the fucking bust, baby. And don't laugh. There are still people out there who think that this is a bull trap, sir. It's a bear market. It's a fucking dirt market. No, I still think that this is what I mean by, you know, long-term sideways transitionary market. You know, it's neither bull nor bear on the macro scale. It's generally sideways as Bitcoin puts in time, setting up for probably the real move, or at least that's what these statistics would suggest here. That's the kind of picture that that I'm being led to look at based off of, you know, these particular setups, as many other more as well. Anyways, yeah, so, you know, in the very, very short term here, this does make sense for a bit of a pullback region. We saw the beginning of that yesterday, I think. You know, maybe there's one more swipe higher to officially meet it at 28,300 or so, somewhere around there. But ultimately, probably this next week, I'd expect a bit of sideways here with a pullback on the short term. But assuming that pullbacks just don't violate on a closing basis about $26,000 to fulfill the 5-day conditions over here, you know, I do look at that as a pullback likely leading towards continuation, validated with a closure above that $28,000 level on a higher term time frame, be getting continuation into the mid to low, or like lowish $30,000 territory. So yeah, that's going to do it for today's particular video. A little bit longer than maybe what it should have been, but this would be one of the videos where I would say, hey, if you found this content valuable, or if you even just hate it, please do consider liking and subscribing, as it does massively help out the channel. And I suspect that these sort of more long-term videos are maybe more relevant to more people out there. So perhaps that could help. Anyways, yes, good place for me to be leaving off. As always, take care, much love, and see you hopefully soon.